annual South African Capital Markets Conference, which is currently on the go in Cape Town. Godfrey Mutizwa caught up with Andre Pottas, debt advisory leader at Deloitte Touche, and asked him how Africa could use the current crisis in Europe to raise money to develop its infrastructure.
If we look at 6 of the 10 fastest growing economies in the world at the moment, or projected, is going to be in Africa. The growth projected for sub-Saharan Africa sitting at 8.8%. That's clearly well in excess of what investors are getting anywhere else in the world. And market attention is starting to turn to Africa as the next big untapped market. So with returns very low and risk very high in Europe and in the US, investors are certainly starting to look to Africa for a safer as well as an enhanced return on their investments.
Sure.
At the same time, from the east, we've got China and India very interested, and we're seeing a lot of interest from funders and project developers in those markets as well.
So what options are we looking at here in terms of funding, particularly around infrastructure, because that's been the huge holdback, if you like, to fully realize, to the full realization of Africa's opportunity?
Very much so. You know, it's estimated that Africa's infrastructure backlog or requirement is $90 billion a year, of which we're spending at the moment $25 billion, 60 of that 90 on capex. So about a $35 billion shortfall that we need to find if we really are going to realize Africa's true potential, because the infrastructure backlog is one of the things holding us back, and if we get that right, those growth rates can certainly be realized and exceeded. So the challenge is to get the funding into Africa, not just from outside Africa though, but to also develop the local African domestic debt capital markets so that we can start using some of our own capital to develop projects in Africa.
Yeah. Now you are raising 2 funds, you told me. Let's talk about those 2 funds. Where are they? Who are you targeting?
Yeah. Obviously, we can't say too much about those at the moment. They're not yet public knowledge, but those are African-specific infrastructure funds being raised locally in Africa. One is a national one. The other one is from one of the regional trade bodies, which is looking to raise an infrastructure fund where they will then fund local and regional infrastructure programs. One of the issues, of course, is that a lot of the infrastructure projects that Africa needs at the moment are regional rather than specific to one country. They're roads or electric utilities lines that run across continents, railways, etc., regional hydroelectric and that schemes. So you need a regional funding basis rather than a national funding agency funding each part of the project, and that's really where we see those funds coming in, together with, as I've mentioned earlier, a lot of interest from outside international existing large infrastructure funds that are keen to start looking at projects in Africa as well.
And how strong is that demand when you look at what you're seeing in terms of the responses when you go on your roadshows?
Look, it's still not easy to fund projects. Africa still has a story.
Because of the whole long-term horizon.
Correct, exactly. And Africa still has a story to sell, but we really think the risk profile is improving. We're seeing increased governance, increased transparency, increased democracy and political stability in Africa, and all of that is helping to make Africa a more attractive destinations. And of course, the more of these projects one does successfully, the more, you know, the story is easy to sell for the next project.
Now, of course, your infrastructure projects sometimes are national and international, as you're mentioning. But what about for municipalities? What options are there for them?
Municipalities are tough to fund. Certainly, even in our local environment, it's really only the big munis that can raise bonds, so the Johannesburgs, Cape Towns, Durbans, those type of guys. For the smaller municipalities, very hard for them to have the credit strength and the controls and that other things in place.
And the management, let's put it that way also.
The skills gap to go and raise bonds on their own. So again, what one would look to do there, for example, is look at putting in place a central bond facility through one of the development banks or regional entities, which individual municipalities could tap. But certainly more of a challenge on that side.
Now you say that more and more African countries are coming in to try and raise money from the debt capital debt capital markets. Now, do they have the technical know-how, and how huge a gap is there?
I think Africa is becoming increasingly regionalized. So, you know, it's easy to look for help from your neighbors or from elsewhere on the continent in terms of setting things up. So that capacity gap is slowly getting bridged. Also, what we're seeing is the guys start small, and then over time they grow their transactions that they do. South Africa, very large, very well developed, very liquid, local domestic debt capital market. We're starting to see some activity in East Africa and elsewhere, and 1 or 2 in West Africa, where those markets are already starting to pick up nicely.